Morning, everybody. It's the 18th of March. We are Signal Centre talking ball. We've made it to the end of the week. I'm Joe Neighbour. I'm joined by Steve O'Hare, who may be feeling a little worse for wear.
Yeah, well, yeah. West Ham are massive everywhere
West
they
Ham are
go.
massive. Yeah. Congratulations to the Hammers.
Yeah, it's brilliant. Great result. Yeah, game
You're
was.
confusing people now, Steve. Do you support Liverpool or West Ham? What's, just being greedy, aren't you? Taking two teams.
Yeah, why not? You can sort of like, I don't buy one commodity or sell one commodity. I do both. So, and I don't care which commodity it is.
A pan football fan.
Yeah, I am. I don't care. Yeah.
Okay.
So,
yeah, fair
yeah.
enough.
Anyway,
Whatever.
changes the subject.
Yeah, so let's get stuck into the headlines. So yesterday we had the Bank of England. It was a dovish approach from the Bank of England, and that hurt sterling yesterday. We saw a little bit of selling going on there. There was an interest rate change of 0.25%, which was pretty much in line with the consensus forecast. However, there was a dissenter in the ranks. There was an 8-1 vote to increase the by 0.25%, but there was one asking for no change. Actually, I thought there would be ones looking for a higher rate hike, but that wasn't to be expected.
Yeah,
I wasn't expected,
strange.
sorry. Yeah. So it was Cunliffe who said he didn't want a rate change.
Right, maybe he's mortgaged up to the hilt.
Yeah, quite possibly. So the overall market expectations of further rate hikes were now downgraded following that, and rates are expected to be below 2% at the end of the year, which has triggered a shift in expectation. So not too sure about that. I think that opens up the opportunity for plenty of surprises and moves that are against the consensus, but we'll see. Markets continue to be wary over what's going on with Ukraine. The latest Western military assessments of Ukraine conflict continue to indicate that Russian forces are making little or no headway. Russia, however, launched a missile attack on the western city of Lviv, which caused further concern, and there were no major developments surrounding peace talks. Obviously, that could potentially change over the weekend. We do have US President Biden and his Chinese counterpart Xi due to speak today. So obviously the briefings for that will be closely watched. Oil is back on the front foot after a sharp week of losses. Oil prices posted strong gains yesterday with fresh concerns over global supply shortages given the sharp dip in Russian crude oil on the global markets. Obviously, it's Friday. So there could be some position adjustment ahead of the weekend, particularly in equity markets. We did see a decent print on the Philly Fed index yesterday. And the dollar remains pretty much on the defensive. So a few bits for us to get stuck into on the chart. Steve, what was catching your eye over the last 24 hours or so?
Yeah, not a great deal really. It sort of felt a little bit sort of sideways yesterday. Looking at gold, really, there's for me we're Friday. We're coming to Friday, and we've got this sort of like bearish looking candle on the weekly chart in gold, and this is an evening doji star formation at the previous all-time high. So for me, I think gold remains under pressure. So definitely sort of something we need to be aware of on this weekly close. It's obviously a very strong close. My gun-to-head trade yesterday, I think it managed to close on the side, but if you'd have run it, it would have been stopped out overnight.
Yeah, you made about 0.3, I think.
No, yeah. So, yeah, I just sort of think it feels a little bit. This is a bullish formation on the daily chart, but today's price action is sort of saying the opposite, really. So, potential for this to sort of be engulfed. It only needs to trade down about $6-7 to sort of engulf yesterday's candle and sort of put the pressure on again. So I'm a bit out of sorts with gold. Similar sort of thing in crude oil. So it makes me think that there is potential for some sort of resolve with the Russia-Ukraine situation, because although we've had this turnaround on the daily chart, I think overall it's not looking too clever on the weekly chart. So I think sort of sentiment is favouring something. On the hourly chart as well on oil, we've had a nice little turnaround in the last hour. Nice topping formation here, so potential for further downside. I might dive into oil today and sort of sell that on the gun to head, I've done quite well out of that this week. On the crypto side of things, it's holding around 40,000. It's a bit boring, to be honest. We've had this rally up this week, so it's a little bit more of a positive candle this on the weekly candle. We've seen like 2 really decent days, Monday and Wednesday, but really sort of stalling towards the end of the week. And again, are we posting a lower high? It looks like it there. And on the weekly chart, we've sort of like closed around the same levels, around about that 38,500 level for the last 3 weeks. I'm wondering if we can get a nice reversal today. That would look pretty bearish again. On the indices side of things, pretty positive looking market. We've had a nice little turnaround in the indices. Morning down. On the daily chart, we've seen like 4 really positive days. So looking for another one today, I think. Feels, yeah, all round like just buying dips seems to be the way to go in indices again. Support coming in FTSE around about 73.44 level. So just about 20 points below where we're trading now. On the DAX, negative day yesterday, almost like a hanging man candle at the top of the market, and negative start to today. But as long as we stay above 14,250, then I'll remain positive on this. A break below there, however, could open up a little bit of profit taking. This is the 4-hour chart, which we've talked about this inverse head and shoulders formation. Are we getting a little bit of a throwback to retest that break of the neckline? Potentially, we are. So overall, still feel positive on the DAX, but we are retesting that sort of like bullish resolve. Similar sort of retest in the Dow as well. We've got this break of the neckline, double bottom formation. Maybe we're coming back to retest that 34,100 before projecting higher. Nasdaq hasn't quite sort of like got up to where the Dow is. Still got a little bit of a way to go to test the resistance, coming in at 14,300 to 14,400 on the upside, getting this nice. That create again a double bottom formation and potential for further upside. So on the weekly chart, if we look at the S&Ps, we had this potential head and shoulders formation. It broke below it, hasn't closed below the neckline, so still a potential formation, but we've got this really great bullish outside candle on the weekly chart in
so what
the
if
S&Ps.
that big hammer candle is the neckline now, and we still haven't quite done the right shoulder? Is
This
that a
one,
possibility?
yeah, I suppose it is. It feels like that would be more of the neckline, I suppose. I like to sort of like, you know, you get a close here, an open here, quite sort of solid numbers, and the low there. That's like 3 candles you're sort of lining up. Yeah, potential for that, but I'd prefer to see that. Yeah, maybe potential for a further right shoulder, 4,593. If we break above there, then could be writing this off and looking for at the highs again. But
Yeah, I mean, I don't know. It just feels a bit different this time. At
yeah, I
some
mean,
point, you know, these people that continually buy the dip on any opportunity, you know, and most of the time they've been right. 90% of the time they've been right over the last, well, 10 years probably. At some
yeah,
point,
more.
for some point that's going to not work, isn't it?
Yeah, it is. Like I suppose it didn't work at the start of the pandemic. It didn't work for a few weeks.
Yeah, a few
That
weeks. I mean,
hurt.
it's not a
Yeah,
proper one, is it?
no, it's not. Definitely that, you know, that we haven't had a bear market in indices for a long, long while. And normally you'd get them in
I
a
mean,
sort of
technically we did have
depression.
one, obviously with COVID, but it just came back so quickly, didn't it?
Yeah,
Didn't last very long at all.
no, wasn't sort of like really. It didn't impact on a lot of people because a lot of people weren't quick enough to react to the disaster that sort of like was in front of them. So
Yeah.
that was a good thing. But yeah, we haven't really had any sort of like bear market like that. So yeah, it's just still feels like buying dips is the way to go. It's confusing because it doesn't feel like we're in that sort of environment. we're in that sort of economic boom cycle. It doesn't feel like it, you know. So
Yeah,
I think what you tend to get sort of at these extremes, you get the markets like trading at all-time highs when it's sort of on the streets. There's sort of like blood in the streets, really.
yeah.
And
I mean,
then
looking at the European indices, they look horrible compared to the
yeah,
US ones.
yeah, and also like China. I think this looks pretty scary. I mean, actually, I didn't really even note. Oh, that's just like
It's
trend line
broken,
just
isn't it?
joining. Yeah, not really. Maybe I drew that trend line after.
What about those 2 point? Yeah, those two there.
That's more of the trend line, isn't it?
Yeah. So you're going to get a
Uh,
retest of that neckline of
yeah,
that top
possibly. Yeah.
and an underside of that trend line at the same time.
I mean, it's a pretty decent pullback on the week. You can't argue against that. But it's still got a long way to go to shake off this bearishness. This 14,500 level for me is really key. I mean, if we go all the way back to January 18, even go back to here, sort of like 2015, this is why this sort of like band is pretty pretty key, I think. If we go back and look at here, for me, really need to get above there to let's colour it in red so we know how dangerous it is. Yeah, it really needs to get back above there to reinitiate. But until then, I think we are in bear mode in China, and that has a massive knock-on effect around the world as well. So yeah.
Cool.
Nice.
Okay, let's take a look at FX then. So get those indices off my screen. Dollar index yesterday continues to find support at the 61.8% fib level on the reverse side of it, actually, or where it sort of broke out from at 97.72. So it's doing a pretty good job. Overall, still remains in the bullish channel, so expecting higher prices. We've got a bit of chop going on here, maybe just a bit of consolidation. Can't really rule out it dropping even further, really down to sort of 97, but even down at those levels, it still looks to be pretty bullish, and I think we are going to continue to see higher prices, still eyeballing this 100 level on the dollar index to be hit at some point this year. If we take a look at euro US dollar, flip side of the dollar index, failing at this resistance here at 111.21. Another attempt at that yesterday, but a close below it and posting a bit of red today. So still looking for lower prices down really towards this 106.35 level, which was the lowest prices that we've seen since March 2020. So that still looks to be the obvious target for me on the downside with that, while this downtrend remains in play. Some interesting moves on some of the Aussie currencies yesterday. So we talked about this earlier in the week. We saw the breakout on Aussie CAD, the pullback, which has held nicely, a bullish engulfing candle that was posted on the 16th, and we've continued to see decent upside since. If we look at Aussie Swiss, this is quite an interesting one today. Rallied into these highs here from October last year, and so far today posting a shooting star candle, having had a little bit of a look at trying to break to new highs. So potential for a rejection here and a reversal, and that may encourage some short sellers to come in and try and fade that. Looks to be an interesting looking setup today, and maybe one for the gun to the head challenge. If we take a look at Aussie Yen, that's broken out to new highs. It did it on the 16th of March, continuing to move higher. No signs of that slowing down at the moment. Some real Yen weakness in play as things stand. Aussie US dollar into this downtrend resistance. Not really too sure what to make of that at the moment, but both pretty strong currencies at the minute, so kind of cancelling each other out. Euro versus the Aussie dollar. This is one that's had a really big collapse, sort of 12, 13 consecutive down days in a row in this period here. We've seen a rally to retest this level here from the 25th of Feb last year. Done a really good job at halting the correction higher, and since then we've seen continued moves lower. So that looks to be on its way down still for now. Take a look at sterling versus the Aussie dollar. That rallied into resistance here at 81.26 and has attracted fresh selling. The next level to consider is this low here from the 16th of April last year, which has done a decent job at support so far. If that gives way, then I think we're looking at a move down to this kind of region, which was from January 2021, which is down here at 174.15. Sterling Swiss, highlighted that one. Not loads going on really to point out. If we look at cable, since sliding below that support level at 131.60, prices have remained below that. Yesterday we saw a long-legged doji by the looks of things. Bit of indecision yesterday. Obviously, we had the Bank of England, so it was quite a choppy session for anything linked to sterling yesterday. But that failure there and a bit of indecision again today suggests that we are going to continue to see more downside towards this 50% fib level at 128.46. I think that will do. Yeah, dollar, as we said, continues to remain strong, and yen very weak. So again, we've seen another big breakout there through that 116.35 level, and there's been no looking back since. So really strong dollar yen at the minute. Okay, that'll do. Going to the head trades from yesterday, as Steve mentioned, he got a small win on gold, 0.37R. That'll do. That's 3 in a row for you. So it's been a pretty good week. You're up 4.5R this week, Steve.
Nice.
Might as well have a day off.
Nah, we've got a few bullets now. We'll have a little bit of a go at this one.
Okay. I was stopped out in euro, US dollar yesterday. 2 losses in a row for me. Okay, Steve, what are you fancying?
As I said, this was my gun to head yesterday for gold. And it looks a little bit of a toppy formation here. Potential for it to break to the downside. So I'm going to go short of gold. You mentioned dollar strength. Dollar strength should affect gold negatively. It's just, I suppose, how aggressive I want to be with it. Let's take a look. Getting short here at, let's call it 1933. Nice round number. I'm going to go for a 3-to-1 risk reward, risking $10 to make $30 on gold. Yeah, why not?
Always
Just
like
sort of, yep. So yeah, selling gold, targeting a move down towards just in front of $1,900. Stop at 1943.
Good luck, mate. Been a good week for you, so see if you can round it off with another
that'd
win.
be a humdinger. I won't come in next week if this wins.
Okay, I'm taking a look at Aussie Swiss. So as I mentioned on the daily setup, which was really interesting me, we had this previous levels of resistance around here from October last year. As you can see, we saw 3 touches of this level, all of which acted as resistance. If we look today, we've seen a retest of that level, and we've had a little bit of a look above it, but we are so far on the session posting a shooting star candle into that level. Long way to go, so I could be very wrong on this, and it is highly speculative, as all of these trade ideas are. But based on that candle there, I'm going to have a sell on this today. So this is the intraday candles, and on the hourly chart, we can see that move higher. We can see a close below the 10-period moving average. That's the first time that's happened since the 16th of March. So quite a strong move higher on an intraday basis. So I'm going to sell at 69.04. Targeting a move down to these lows down here at 67.35 with a stop loss just above today's high at 69.43. So looking for 4.4R on that one today.
Excellent.
That'll be nice. Okay, data-wise today, we've got the Canadian retail sales due out 12:30. We've got the chat between Biden and Xi in China, which may impact markets throughout the session. But other than that, that's pretty much it. Next week, we've got a few interesting bits out. We've got consumer prices in the UK. We've got a spring statement from the UK. And on the 24th of March, we've got the Swiss National Bank with a policy decision. So that could be a bit tasty if anyone's trading Swiss currencies, as we know they have in the past. Caught people off guard with these meetings.
Yeah.
Okay, anything else, Steve?
No, all good there.
Cool. Well, everybody have a great weekend, and we'll be back on Monday.
Cheers.